TILA-RESPA integrated disclosures coming August 1st, 2015. The regulations that impact mortgage lending continue to be revised on a regular basis, and this year is no exception. In fact, some of the biggest changes in recent history will be effective for mortgage applications taken on or after August 1st, 2015. The CFPB has published revisions to TILA and RESPA that are being affectionately referred to as TRID, TILA-RESPA Integrated Disclosures. There are lots of changes, but the biggest one is that the GFE, HUD-1, and TIL forms, with just a few exceptions, will no longer be used. Instead, the new loan estimate, or LE, will replace the GFE and initial TIL, while the new closing disclosure, or CD, will replace the HUD-1 and final TIL. Let's take a look at a sample LE and CD from here. Page 1 begins with general loan information and then includes sections for loan terms, projected payments, and costs at closing. It's important to note that the borrower will now be provided the estimated cash to close amount, which is not included on the current GFE. Page 2 is a breakdown of loan costs, other costs, and a summary entitled Calculating Cash to Close. What's different on this page is how the costs are broken down. The 800, 900, etc. series of fees no longer exist. Loan costs include origination charges, services you cannot shop for, services you can shop for. Other costs include taxes, prepaids, initial escrow payment, and other. Calculating cash to close includes a summary of all the charges and credits. Another important difference to point out on this page is that services you cannot shop for will now be subject to zero tolerance, where in the past, these charges fell into the 10% tolerance category. On the third page, you'll find the loan officer's contact and license information, followed by a cost comparison of 5 years total cost, the APR, and total interest percentage, or TIP. The total interest percentage is entirely new and discloses the total amount of interest that the borrower will pay over the loan term, expressed as a percentage of the loan amount. Let me give you an example. Let's say that the borrower's loan amount is $100,000, and they'll pay $50,000 in interest over the life of the loan. Then the total interest percentage would be 50%. Basically, take the interest paid on the loan and divide it by the loan amount to find TIP. You'll also find other loan considerations that you are familiar with on page 3, like assumptions, late payment, and servicing. The closing disclosure is a 5-page form, and it lists the loan terms, payments, and a summary of the closing costs on the first page. On the second page, the closing costs are broken out in detail and identify who, and when, if paid before closing, is paying for the charges. The third page calculates the cash to close and provides a summary of the transaction that looks similar to the first page of the current HUD-1. The fourth page discloses loan features, such as assumptions, late payments, and escrow account information. If applicable, there will be details that describe the terms for an adjustable rate or adjustable payment mortgage. On the last page, you'll find loan calculations similar to the current TIL, including the new TIP calculation as well as other disclosures, and contact information for the lender, real estate professionals, and settlement agent. In addition to the new forms, there are some other changes to be aware of. First, covered loan types continue to include the close-end consumer credit transactions you're used to. What's new is that the following previously exempt loan types are now covered: construction-only loans, and loans secured by vacant land or by 25 or more acres. Also new with TRID is that the definition of an application has changed. Until now, 7 pieces of information were necessary for a complete application. With TRID, only 6 are now required. The 7th catch-all element has been removed. Recall that Academy defined the 7th item as the interest rate. Effective August 1, 2015, Academy no longer requires the 7th item. There are some things that won't change. For example, the loan estimate document needs to be delivered within 3 business days of receipt of an application, and it still needs to be delivered no later than 7 business days before closing. We'll share more on this topic a little later. The CFPB has provided some clarification regarding the different definitions of business days. We will be putting together job aids in the near future to help you better understand these differences. Another thing that hasn't changed is there are still 3 sets of tolerance cure buckets: 0%, 10%, and not applicable. However, what goes in the buckets has changed. Services that are required, but that the consumer can't shop for, like the appraisal and credit report, are now in the 0% bucket. The rulings regarding redisclosure after a change of circumstance are basically the same. A rate lock requires redisclosure of the LE within 3 business days. It's important to remember that a revised loan estimate cannot be issued once a closing disclosure has been provided. This, of course, means that your loan has to be locked and a redisclosed LE delivered to the borrower before the closing disclosure can be delivered. Timing will be critical. There are a few really big changes regarding the closing disclosure, or CD, that you should know. First is who will prepare this document. Right now, the settlement agent prepares the HUD-1, and the lender prepares the TIL. With TRID, we will have just one document that requires input from both lender and settlement agent. Effective August 1st, Academy, like most other lenders, has decided that it will prepare the CD. This decision was made because the regulation clearly states that the lender has full responsibility for the CD. This will require early and clear communication with the settlement agent and realtors. Once the borrower has received the CD, there are only a few circumstances that will permit a change to it. Second is that the closing disclosure must be in the borrower's hand at least 3 business days before closing, and I repeat, 3 business days before closing. Also, if the CD isn't provided to the borrowers face-to-face, you must plan on another 3 business days, a total of 6, for delivery to them. Now, because this is such a big change, Academy is working on solutions to streamline this process. Right now, the best option will be to deliver the CD electronically, with a confirmation that the borrower received the CD. We can't just rely on the fact that it has been sent. We need the confirmation in order to be in compliance. In order to utilize the electronic option, Academy and the borrowers have to comply with the requirements of the e-Sign Act. Getting borrowers to agree to electronic delivery early in the loan process will have a very positive impact on the closing time frame. Not to mention, help with appraisal delivery. One more thing on delivery. If the loan is rescindable, all borrowers, non-borrowing spouses, and anyone with an ownership interest in the property need to individually receive the CD. On a related note, the settlement agent has responsibility for preparing and delivering the CD to the seller, and that delivery can occur at the closing table. Now let's shift focus to 3 categories of changes that require a corrected CD. First, changes that occur before consummation that require a new 3 business day waiting period. This is required when the APR changes by more than 1/8%, the loan product is changed, or the addition of a prepayment penalty. Second, changes that occur before consummation and do not require a new 3 business day waiting period. In this case, the corrected CD must be received by the consumer at or before consummation. Changes that can be made are limited. The CFPB expects that the initial CD provided to the borrower is accurate. Third, changes that occur after consummation. In some circumstances, the consumer must be provided with a corrected CD if an event in connection with the settlement occurs during the 30 calendar day period after consummation that causes the CD to become inaccurate and results in a change to an amount paid by the consumer from what was previously disclosed. Similarly, a corrected CD must be provided to the seller. A corrected CD must be provided to correct non-numerical clerical errors no later than 60 days after consummation. An error is clerical if it does not affect a numerical disclosure and does not affect the timing, delivery, or other requirements imposed by Reg Z. A corrected CD must be provided no later than 60 calendar days after consummation if the creditor cures a tolerance violation by providing a refund to the consumer. The last 2 topics we will touch on today are additional notices and additional clarity. In addition to the disclosures discussed, be aware that the following notices may be required after loan consummation: escrow closing notice and partial payment disclosure. The escrow closing notice. This must be provided no later than 3 business days before an escrow account is canceled, unless cancellation is due to consumer's delinquency or a loan is paid off, or if the consumer requests a cancellation. The notice must be provided no later than 30 business days before closure for any other reason. If the notice is not provided in person, the consumer is considered to have received the disclosures 3 business days after they're delivered or placed in the mail. For the partial payment disclosure, if the creditor is required to provide mortgage transfer notices when the ownership of a mortgage loan is being transferred, this notice must also be provided. Regarding clarity, some things aren't new, but have been more clearly defined in the new rules. With the clarity, you should expect that investors, agencies, and regulators are likely to be more strict in their reviews, as each clarified item has the potential to result in unsaleable loans. First, limits on fees charged prior to disclosure or application. A creditor cannot impose any fee, such as for an appraisal or application, etc., on a consumer until the consumer has 1. Received the LE, and 2. Indicated an intent to proceed. A bona fide and reasonable fee for obtaining a credit report may be collected prior to providing the LE. Second, imposing a fee. A fee is considered imposed if the lender requires a consumer to provide a method for payment even if the payment is not made at that time. This would include requiring the consumer to provide one of the following prior to receiving the LE and/or indicating an intent to proceed. Requiring the consumer to provide a check even if the check is not to be cashed until later. Requiring the consumer to provide a credit card number even if the credit card will not be charged until later. These are both practices that are specifically prohibited. Third, regarding the intent to proceed. A consumer indicates intent to proceed with the transaction when the consumer communicates that they wish to proceed after the LE has been delivered. The communication may include oral, in person, or over the phone, written via email, signing a form after receipt of the LE. A consumer's silence is not indicative of intent to proceed. An important note, please remember that the communication must be clearly documented. Last, requiring verification documentation. A creditor may not condition providing the loan estimate form on a consumer submitting documents verifying information on the application or loan request. For example, we cannot require a purchase agreement to support the sales price or address of the property. We cannot require bank statements or pay stubs to support information provided by the consumer. We've covered a lot of information about the new rules, new forms, etc. One thing we want to make sure is clear to you: once TRID goes into effect on August 1st, 2015, you can still provide the borrower with an estimate of fees prior to receiving a complete application. Just be aware that the estimate cannot look like the new LE or CD forms, it cannot look like the current GFE or HUD-1, and the estimate must comply with some new requirements. If you have any questions about the new loan estimate, contact your partner at Academy Mortgage, and we'll be happy to share with you how Academy plans to handle these changes.